Have you ever heard of a commercial landlord-tenant loan? If you haven't, we're not surprised. Financing tenant improvements for them may seem counterintuitive. Let's look at the 5 main reasons landlord and property managers think financing a tenant loan is a bad idea. And we'll tell you why they're wrong. As landlords and property managers of commercial real estate, you look for ideal tenants. You want to keep your units occupied by businesses or services that have high value. So, why would a high-quality tenant need financing? There are a number of reasons a tenant might need additional capital before moving into a new unit. If the business is growing, they will need extra resources to meet customer demand. Or they may require leasehold improvements, but can't cover those expenses on top of the costs of moving to a larger unit. You've got a great potential tenant, but they're asking you for lease incentives, allowances, or even worse, extended free rent. Most of the time, the landlord will give a tenant what they're asking for in return for a longer lease commitment to try to make back the lost revenue. But you can't make back free rent. And those other incentives, they don't usually have a great ROI. Consider instead a landlord-tenant loan. But we're not a bank. Great point, you're not a bank. But that doesn't mean you can't lend out money. In fact, free rent and other rent concessions mean you're basically doing what a bank does with little to no profit for you. Don't have a ready cash flow? Get a loan. Building owners are more likely to get secured loans than a tenant is to get an unsecured loan. With better terms, that means you pay the bank less interest for your loan while lending out the same amount to your tenant with an additional 2 to 4% interest. At any rate, no pun intended, if you loan at a lower interest rate than what the bank would charge your tenant, everybody wins. You're not a bank. You're also not a nonprofit, so why are you giving money away? We don't want the risk. Commercial real estate always carries an element of calculated risk. If you were risk averse, you'd be in another line of work. But what additional risk would you be taking? You've already vetted the tenant, and based on your assessment and their financial score, terms and conditions of the lease are set. Use the information you already have to turn those incentives into a loan with repayment terms built into the lease. Having a loan agreement and a properly written contract ensures that a tenant can't walk away from a loan without losing the premises. Want to avoid risk? Be aware that giving money away is always a 100% loss. Tenants want free things, not loans. Who doesn't want free things? But you don't run a nonprofit, and free things may get you a long-term tenant, but you won't be recouping those freebies. At lease renewal, will your tenant ask for and expect to receive the same concessions they originally received? Agreeing to this again and again means your units will constantly be in a state of loss to lease, never reaching market value. On the other hand, a landlord-tenant loan gives a tenant the security of knowing they are able to meet all their financial obligations during a period of flux, with no loss to lease for you. In fact, often the money you loan them is going back into your investment by way of improvements the tenant would otherwise not be able to afford. What do tenants want? Tenants want what's best for their business. We aren't set up to offer loans. There are a couple of things to consider here. 1, you're not a bank, but we already covered that. To clarify, we mean that you don't have lending software that tells you how much to finance. And 2, you may not intuitively know exactly what to finance. Let's deal with the second item first. That one is actually fairly simple. Allowances and rent concessions have a dollar amount attached to them, which equals a reasonable amount to loan a tenant. If you were already going to give this away, you can easily turn this into a loan and recoup your investment. As for the issue of not knowing how much to finance, solving the problem of what gives you an excellent indicator of how much. All that's left is to factor in the risk assessment you've already done and the fact that any improvements made to the building remain even if the tenant leaves. Not set up to offer loans? You are. You just didn't know it. Our business systems don't support loans. Here is where you may need some help. If your business systems and software don't give you flexibility and options, it's time for an upgrade. You've heard the phrase, work smarter, not harder, right? That goes for your property management software, too. Anything that prevents you from making decisions based on what's right for your business is exactly wrong for your business. Your software needs to account for variables in a tenant relationship, like a landlord-tenant loan. It should include key data and metrics to ensure you are accounting for all expenses and loan repayments, both yours to the bank and your tenant's payments to you. Ideally, the system would show all aspects of the lease costs in one place. You'll want to see totals, what you've put in, what your tenant has put in, and where costs might be going over budget. Equally as important, your business software needs to have accurate reporting that is flexible. Your accounting professional should be able to review repayment schedules, provide invoices, track loans in different views, record or adjust payments, and have flexibility in start dates. Are your business systems holding you back? Time to invest in your business. Still not convinced? A landlord-tenant loan opens up possibilities for both sides. Inadequate cash flow limits tenant options, but you can support your tenant's success. With interest earnings and legal costs built into the lease agreement, you earn easy revenue. Few incentives mean better ROI, which is better for your business. Software that does what you need it to means the difference between accepting losses and creating new opportunities. CRESSblue does that and more. Book a demo today and find out how you can be ahead.